Okay, hello and welcome. I'm Jason Gumpert from MSDynamicsWorld.com. Thanks for joining for today's Dynamics AX educational event presented by IBIS. Today we are joined by Frank Hamelly, a senior consultant at IBIS. Frank's been a longtime friend of MS Dynamics World. It's great to have him back for this new session on inventory reconciliation for AX. To get this event started, please know that we do invite you in the audience to add your feedback and ask questions during the presentation. You can use the Q&A panel that you see to the right of the main presentation window to ask Frank questions. He will be saving time at the end for those. We also have a brief poll question that I'm going to bring up now just to gather a little bit more input from you in the audience about your interests and your experiences, and we'll just leave that up for a moment or two here as we get going. So without further delay, let me hand things off to Frank.
Thanks, Jason. It's good to be back, and thank you everyone who's on the presentation today for taking some of your valuable time out of your day to listen and hopefully learn a little bit about inventory reconciliation in Dynamics AX. I'll be using AX 2012 R3 for the presentation, so hopefully that will provide a good platform for you to be able to see and learn. And before we get into the presentation, I just wanted to mention that the slide deck that I'll be using, I'll actually be using the slide deck and the application itself so that we don't get too bored with just looking at PowerPoint slides. But the slide deck I'm using will be available from MS Dynamics World and or IBIS at the end of the presentation. And I've designed the slide deck to be a takeaway for you so that if you need some configuration guidance or explanation of certain fields or values in setting up the inventory evaluation report, you'll have that slide deck as a tool to take back to your desk with you to do so. Also, I'd like to mention that that's me. You don't care that much about me. You might care just a little bit about IBIS, but I wanted to mention that a little bit of IBIS background. I've worked for IBIS now for about 3.5 years as a senior consultant. We're a Sonata software company and a Microsoft Gold partner that mainly focuses on Dynamics AX and CRM. We've been in this business for 26 plus years, and our main focus is in the supply chain, manufacturing, distribution markets, and we are highly focused on client care and services. The objectives of our session today are, number one, to configure the inventory evaluation report to really provide the info that you need in order to be able to reconcile your inventory subledger back to the general ledger accounts. In order to do that,
I'm sorry to...
Sure.
We're seeing a gray box on the right side of your window.
Oh, that's that polling box. Okay, I just got rid of it.
Yep, it's gone now.
Is that better? Okay.
Yes.
I thought it would go away on its own eventually. So we want to understand what the inventory evaluation report does for us, because it's one of the key tools in reconciling our inventory subledger back to the GL, and using the inventory evaluation report as one of the primary tools in our reconciliation toolbox. Now, depending on the inventory evaluation method or methods you are using, it may be important to do an inventory close at the end of the month before you actually run the inventory evaluation report to do your reconciliation. If you're using strictly standard cost for inventory evaluation, then the inventory close process is not required. But if you're using any other valuation method or a combination of valuation methods in your business, then you do need to perform that inventory close before we start a reconciliation process, because the inventory close is what updates the cost records from a financial perspective, or settles those cost records at the end of the month, so that we have an up-to-date cost of goods sold and inventory valuation value after that inventory close is processed. Okay, so key to inventory reconciliation is the inventory valuation report and getting it set up properly. Because there are so many options in Dynamics AX as it pertains to inventory valuation, posting, item posting accounts and item posting profiles, your item model group and your item groups, it's critically important that we have an understanding of what each of those settings is, and how it affects our inventory valuation and subsequently the inventory valuation report. We'll also take a brief look at a couple of other reports in the application that can assist you in reconciliation when you find that your GL and subledgers don't tie. But the inventory valuation report is really the core tool that we want to look at setting up and using. Okay, so to get to the inventory valuation report setup, we go to Inventory Management Setup, Inventory Value Reports. And again, this is 2012 R3. If your navigation in previous versions is a little bit different, then it may be a little bit different. I'm going to skip over to AX right now. And if we go to Inventory and Inventory Value Reports under Setup, this is where we find that setup. And I already have an Inventory Value Report ID set up here. We will go through each of these fields in a fair amount of detail because it's important to understand what each of these settings does and means in configuring the inventory valuation report in the way that it will be most beneficial to you. So the first thing we do is give the report an ID and a name. Then under date interval, what the date interval does is if you have, sorry about that, if you have a specific date interval, that means beginning of month, end of month, prior month, mid-month, whatever, you can define a date interval here to use as a default when you run the report. Typically, I like to run this report at month end, right after I've done the inventory close report. So you'll see when we go to run the report, we have the ability to enter a specific date or specific date range that we use to include or exclude date-based transactions in the report. Typically, we're going to use posting date as the range. I've never seen anyone use transaction time as the range in this report, but I guess if you wanted to get that finite with transaction time, you could do so. Dimension set, what this does is tells me, okay, which financial dimension set do I want to use or do I want to compare this report to? So because in my demo environment here, my inventory is rolled up to the main account level, I'm going to use just my main account dimension set. Okay. So next then, I'm going to skip back to the presentation. Here's a description of date interval, the range, and the dimension set. And again, this is a takeaway for you to utilize in configuration of your report or reports when you get back to your desk. Under the columns FAST tab, which is what we're seeing here, of course, we want to see the position on inventory. And what this really means is anything other than work in process inventory and deferred cost of goods sold or cost of goods sold. So because we want to look at inventory, and we'll see in a minute that we're going to be looking at raw material and finished goods inventory simultaneously, because typically we will review that information or we could look at just raw material or finished goods individually. But typically we look at raw material and finished goods separately from work in process. As you'll note here, I have two inventory valuation IDs, one set for inventory, which in this case is raw and finished goods, and one set for work in process, which has a different setting in my financial position section. For this presentation, we'll be focusing on inventory valuation, but if you wanted to create a report for WIP, basically it's the same process going through the setup. Okay, so I want to be able to compare my on-hand inventory value to my cumulative accounting values, and what that's really saying is, okay, at the bottom of my report, I want to see my GL account balances, so I don't have to refer back to my trial balance to see what my GL account balances are when I'm doing printing this report and going through my reconciliation process. So when I check this box, what that does is tells the report that go ahead and print my accounting balances, my GL account balances at the bottom of the report for comparison purposes. This is the inventory account that I'm going to use. And if we look at the details on this account, we'll see that this is a total main account type, which means that I have two or more accounts that I'm rolling up to this total account value. And if I click on the totals button, what we're looking at here is my charted main account setup. If we look at the totals button, you can see that I'm totaling two accounts. This happens to be my raw material account. This 1530 happens to be my finished goods account. So I'm telling the report through the use of a total main account type that when you print this report, I want to see the sum total of those two accounts on the report. Over here under inventory dimensions, if we have different types of dimensions set up that we want to see broken down in the report, we can do so. I happen to want to see on my report size and color, so that if I print the report in detail, I'll be able to see my items listed by size and color in the report. And of course, we could choose any of the dimensions that we might have set up in the system to further stratify the results in the report by any of those dimensions. I'm saying I want to see those values individually by dimension, but I don't necessarily need a total. So I have my total checkboxes unmarked. I just want to be able to see that level of detail without totaling them. In my report, I do not want to see my physical and financial values summarized. I want to see those separately. And I don't want to see inventory transactions that are not posted to the general ledger, because for purposes of reconciliation to my general ledger, it wouldn't make sense to include those values that are not yet posted to GL. You might ask, why would I have inventory transactions that aren't posted to the GL? Well, that depends on how you have your posting set up, whether it's asynchronous or synchronous. Some companies use an asynchronous posting setup in AX, which means that before my inventory transactions get posted to the GL, there's a batch process that has to run, or a periodic process that has to run to update my GL. Most companies have that posting set to synchronous, so that whenever there's an inventory transaction posted on the inventory side, it automatically posts to GL. But there may be a scenario where the posting is asynchronous. So I would want to not see anything that hadn't been posted to the GL yet. Whoops, what's happening to my session? Sorry about that little technical difficulty, folks. Hopefully, there we are. Remote desktop and the wonders of the internet. Average unit cost. I have an option to calculate the average unit cost on the report. And that may or may not be of value to you. May or may not be of value to you, because what this is, it strictly takes the total physical quantity and divides that into the total financial value and provides an average unit cost column on the report. May or may not be valuable depending on what inventory valuation method or methods you are using. I do want to see total quantity and value on my report, so I've got that box checked. And I want the availability to see the resource ID and my resource group. Resource ID is the item number. Resource group is the item group. Why they don't call them item ID and item group here, I'm not sure, but that's the definition. And if we skip back to the presentation, let's see, I'm pretty sure we've got that, yeah, we've got all of that defined for you here in the slide deck. I'm not going to read through these slides because I find that might be pretty boring to read something out loud that you can easily read yourself later. Okay, so getting back to the application. Slide things up here a little bit. So here's where I define my rows in this section, in the rows section. We've just defined the columns. Now I want to define my rows. We have the ability to have a row for material, which by default you're forced to have a row for material, and why would we not want to? We can have a row for labor, we can have a row for indirect cost, and we can have a row for our outsourced costs associated with our product. Detail level, I can see either totals or transactions. I really only want to see totals because if I set my detail level to transactions, that means the report is going to print every transaction, every inventory transaction that is included in my date range, and that could be an extremely long report. Now, when you get to finding unreconciled differences, running the report at the transaction level, maybe by a certain model group or resource group, that might make sense so that you can drill into more detail into the report. But for initial report generation, I want to include just my totals level. And I don't want to include beginning balance. Note that beginning balance is only available if and you get a warning here when you select a transaction detail level. We recommend that you don't select the transaction detail level for a large range of items. But this include beginning balance is only available if we've selected the transactions level of detail. Okay. So we've set up our report. Now let's go see what this report is going to tell us. One thing that I'll mention at this point is we can set up multiple versions or multiple report IDs depending on who the consumer of the report is. For instance, if you have someone in the finance team who maybe CFO and just wants a high-level overview of the total value of your inventory for each resource group, you might set up an inventory value ID that only shows totals by resource group. Maybe your inventory cost controller wants to see the totals for each resource or item that includes the values that are in work in process. So we'd set up a separate inventory report, inventory value report ID that includes totals for each of the items and has columns for the value of WIP inventory. Maybe we have maybe the inventory cost controller has a clerical person working for them, and they're really the person that's going to drill into the details of any unreconciled differences between our inventory and the GL values. And so that person might actually want to be able to see a report maybe by resource group that shows the inventory down to the transaction level so that they can dig into the details to find those unreconciled differences. So the application gives us the ability to set up an unlimited number of valuation report IDs to customize these reports to the user, to the consumer of the report. Okay. Let me skip back to the slides to make sure I don't miss anything. We talked about the columns, setting up the columns in the report. Yeah, let's review this real quickly. Financial positions. And let's go back to the app for a minute on that. So the financial positions here, we're going to see columns on our report based on this setting, the inventory setting. And those columns are going to be financial quantity, financial amount, physical quantity posted, physical amount posted. And I just wanted to review the definition of each of these briefly as a foundation for what we're going to see when we review the report. So financial quantity is the physical quantity of on-hand inventory that's been financially updated, meaning if it's a purchase order receipt, that purchase order receipt has been invoiced. It's been financially settled. If it's a sales order, that sales order has been invoiced, meaning it's been financially settled. Or if it's a manufacturing order, production has ended on that manufacturing order and it has been financially settled. So that's what financial quantity means. Financial amount is the dollar value of on-hand inventory that has been financially updated or financially settled. The physical quantity posted is the physical on-hand quantity that's been physically updated but not financially updated. In other words, this could be a purchase order receipt that has not had an invoice matched against it yet, so we don't know what the final quantity will be on that. It could be a sales order packing slip that has not been, where the sales order has not been invoiced yet. Or it could be a manufacturing order where the line on the MO has not been reported as finished and posted to the ledger. The physical amount, the physical amount posted is the dollar value of on-hand inventory that's been physically updated but not financially updated, which just means it's the opposite of the inventory that has been financially updated. It means we haven't invoiced or production ended either a purchase order, a sales order, purchase order receipt, a sales order packing slip, or a manufacturing order. So it's really critical to understand the definition of each one of these financial position terms. Work in process, I'll let you read through the rest of this on your own, the previous slide was really the most critical definitions of the columns on the report that we're going to see when we run it real quickly. Again, I'm not going to read through these. These are for your personal consumption when you have an opportunity to do so. Okay, so getting back to the application then, we've set up our report, and now we want to see what that report looks like. So how do we run our inventory valuation report? Well, it is under inventory reports status, inventory value, inventory value. We click on inventory value and our inventory value parameters window pops open. Here's where I identify which report I want to run. And I might have a list of half a dozen or more reports here depending on the consumer of the report. This is the inventory valuation report that we just looked at the setup for. If I was using a date interval code, and let's take a look at the setup of that real quickly, I would define my date interval in this window, and then I could use that code to pull into the report. Typically, I'm going to run the report at month end, unless I'm really ambitious and want to run the report on a weekly basis so that I can make sure that my subledger to GL account balances are running true throughout the period, or I can even run the report on a daily basis if I wanted to. But when we run the report at month end, it's going to give us a report of all of the previous month's activity. Note here that I've selected to run my FG, or finished goods, resource group. And I'm only going to run this report for one warehouse. I don't want to see I really don't want to take the time in the presentation to run the report for every resource group and every warehouse in the application. My print destination is screen, and if I wanted this to select a particular dimension code to run this, the dimension code would be, it might be color, style, size, so on and so forth. I could filter my report based on that dimension or those dimension code values. Of course, with any report in AX, we can set it to run in batch mode if we want the report to run overnight for us, for instance. In case it's it takes a long time to generate the report, we could do so. But now that we have the report parameters set, we'll go ahead and run this report and see what it is showing us. Okay, now I have to warn you that this is test data. So unfortunately, our test data is not going to tie out to the general ledger balances, but we can see the form that our report is going to take. So this is our inventory value report dated 11/30/2015, and we're running it for just material in this case. My resource group is finished goods. Resource is my item number. Here's my breakdown of item number by color and size. So notice that back in the inventory valuation setup screen, I said, okay, I want to see my color and size dimensions, but don't total them. If I had selected to total those, then I'd have a total line under each one of the, I'd have a break between each color and size, and I'd have a total line there, and that would tend to make my report longer, take longer to generate, so on and so forth. reference is ending balance, and here are my columns. Very important information on this report. My financial quantity, which remember that's the quantity that has been financially updated. My financial amount, which is my quantity that's been financially, or the value that's been financially updated. My physical quantity posted, physical amount posted, and then my inventory quantity and inventory amount. And here's that average unit cost column that we talked about briefly. Again, whether this is of any value to you or not is, that's your choice. This particular example, we're running FIFO inventory, so the average unit cost might, for reference purposes, be valuable to us, but that would be about it, just for quick reference to what a non-weighted average unit cost value would be for the items on this report. Okay, so that's all well and good. We can see by item within this resource group what our inventory valuation is at November 30, 2015. Let me skip back to my slide deck to make sure I'm not skipping over anything really important. Okay, we'll look at that and that. Okay. So this is the report detail. This report happens to only be 2 pages long, which is by design for our presentation. So we see down at in the main body of the report, we have all of our detail. And at the end of my resource group, I have a resource group total, and also I have a report summary. Okay? This sum inventory amount is really what I want to be able to tie back to my GL total. Now, because I only ran this for one resource group, my inventory sum amount is not going to tie back to my my GL total necessarily, because I would need to include all of my resource groups in this report so that it ties back, hopefully ties back to my GL balance. But we get a sum of the financial quantity, the financial amount, physical quantity posted, physical amount posted, the quantity, and the sum, the total inventory value on this report. My second page on this report shows me by account my raw materials inventory balance at 11/30/2015 and my finished goods inventory balance at 11/30/2015. So if I had run this report wide open to give me everything in my raw materials and finished goods inventory on this report, hopefully it would come close. What happens if it doesn't? If it doesn't tie out, what do we do then? That's really the key to making use of this report successful. Okay? So to reconcile our physical inventory values with the GL balances, of course, we're going to compare the financial value on the report with our inventory accounts and any physical value with any uninvoiced inventory accounts. So for instance, if you have separate account, you may have separate inventory accounts for pick lists and issues, then you want to compare the physical value on the report with whatever account picking lists, whatever GL account your picking lists are being posted to, and the financial value to whatever account issues and receipts are posted to. But if like in the case of our example here, we only have one account that both financial and physical values are posted to, then we would use the total of those two columns, the amount columns, to compare it to our GL account. Now, let's say that we're running Reconcile throughout the year, and for some reason in the month of November, something occurred that threw our reconciliation out of balance. How do I investigate that? Well, there are two additional reports in here called Potential Conflicts, Inventory and General Ledger, and Potential Conflicts, Work in Process and General Ledger, depending on whether you're looking at raw material and finished goods or work in process. Well, after we've run our inventory valuation report and we see we've got some discrepancies there, we can run this potential conflicts report. And this potential conflicts report also allows us to choose a date interval code if we have set those up. But this is really what's valuable in defining the parameters on our potential conflicts report. And that is, again, as with the inventory valuation report, we can filter this report down to a daily level if we want to. The way I would do this is if I see a reconciliation discrepancy, I would run the report for the entire month. And then if there's too many results in their report, I might run it week by week. And if there are too many resulting discrepancies, running it week by week, I might run it day by day so that I can drill down to, okay, what day or days did these discrepancies occur on? In this case, I'm going to run it wide open for the whole month of November. And I want to focus for this analysis on just my finished goods inventory account. I'm going to exclude physical to ledger because what that means is I don't want to include anything that hasn't been posted to the general ledger, of course, in this report. I could also include different financial dimensions to run this report against if my inventory valuation report had been set to run against certain financial dimensions. And of course, I could run it by item number, by reference, by lot ID, by voucher posting type, dimension code, so forth. So there's a fair amount of filtering that I can do on this report so that I can get very finite and discrete in the range of items and dates that I want to run this report against. Once I have all of that defined and I'm happy with my report parameters, we run the report. And the report gives me, in this case, because I've never really reconciled this account before in my testing environment, it tells me what my inventory module balance is, what my general ledger balance is, and the value of my discrepancy, and it gives me by item number, by date, by lot, and by transaction reference, the value, the details of the values that make up this $560,000 discrepancy. So once I have this level of detail, and the comment here indicates that the posting type inventory receipt has been posted to a main account that does not represent inventory. Well, that's where in our earlier comments about all of the settings that are associated with item groups, item model group, item posting accounts, and so forth, play a huge factor or a huge role in making sure that our general ledger and inventory subledger transactions correspond properly to each other. Now you can see that this is the only error comment that I'm getting on this report because, again, this is just testing data. But you would get a different comment on this report depending on what the nature of the discrepancy is. So between the inventory valuation report and my potential conflicts report, these two tools give me the ability to, number one, see that I've got discrepancies between my inventory subledger and the general ledger value. And number two, the detail that I need to be able to drill down into those discrepancies and resolve them. I used to be a Dynamics GP consultant before moving over into the AX world. And I can tell you, there's nothing in GP that will do this for you. This is really these two combination of these two tools, the valuation report and the potential discrepancies report, are really valuable in helping you reconcile the GL to inventory. And again, if we needed to see the potential discrepancies on WIP versus general ledger, we could see that here. Okay, let me skip back to my deck and make sure that I haven't missed anything. That's a review of report sections, the GL account balances, some instructions on how to use the inventory valuation and the potential discrepancies reports effectively. And it looks like we've got about 10 or 15 minutes to answer any questions that may have popped up, or any questions that you might want to ask now.
All right, absolutely. So yeah, please do enter your questions. Yep, please do enter your questions into the Q&A block that you see to the right of Frank's presentation right now, and we'd be happy to start moving through those. Again, a couple folks did ask since we started about access to the slides. We'll be emailing everyone who registered with more information on that pretty shortly on how to download those slides, as Frank had said earlier. And yeah, several questions have come in, so let's dive into them. So what is the identifier between inventory and work in progress in the setup columns financial position screen?
Okay, so let's go back to that. Let's set up. What is the identifier between, could you read that again, Jason?
Yeah, between the inventory and the WIP in the financial positions.
So I assume you're talking about these two checkboxes. Inventory would be for your raw material and financial goods. And if we are talking a work in process valuation report, we would select WIP as the financial position. This really just indicates which columns in the report we want to appear in the report. So typically in an inventory report, where we're looking at raw and finished goods, we only want to see raw and finished goods. We wouldn't want to see WIP in that report. You could include WIP in the inventory, in the finished goods and raw report, but it would make it a little more difficult to perform the reconciliation with all that information in one report. That's why we have this broken out separately on two reports. Because traditionally or typically, you're reconciling the WIP accounts versus the raw and finished goods accounts separately. I hope that answers your question.
All right, next question is, what is the difference between physical and financial values?
Okay, let's go back to the presentation for that again. We've got that defined here, right here. Financial quantity is a physical quantity of on-hand inventory that's been financially updated, meaning if it's a purchase order, receipt, or a sales order, a sales order, it's been invoiced. It means that transaction has been settled. Or if it's a production order, manufacturing order, production has been ended. That's the quantity. The financial amount is the dollar value of on-hand inventory that's been financially updated, which means it's been invoiced or production has been ended. Physical quantity posted is this. It's really purchase order transactions, sales order transactions, or manufacturing order transactions that have not been completed. It means that in the case of a PO or sales order transaction, they have not been invoiced yet, so we do not know what the final quantity and final dollar value are. In the case of a manufacturing order, it has not been production ended, so we don't know what the final quantity and final financial dollar value of that manufacturing order is yet. Okay.
All right. Can you cover briefly the validity of attempting to balance inventory to the GL when the system setup allows negative physical and negative financial inventory?
Well, that's a great question. And in fact, we just went through a go live with a client last week that allows, they actually have a retail component in their implementation where they do not allow negative physical or financial inventory at their main warehouse, but they do allow it at their retail warehouses. They have 4 satellite retail operations, and they do allow the negatives at their retail warehouses because they never want to have a customer walk in and not be able to complete a sale because on-hand inventory quantities haven't been updated. So that's an extreme, when we were just having a discussion with the client about this yesterday, so that is an extremely pertinent question in regards to my recent experience. But if you do allow negative financial and or physical inventory, those transactions, the analysis of those negatives are going to be the same as the analysis of positives, because the inventory valuation report is going to reflect any negative on-hand quantity balances for your items, and your potential discrepancies report is going to reflect any potential discrepancies that might be associated with those. Now, in the context of negative inventory, your potential discrepancies report may not show you a discrepancy on negatives if you've decided, if your organization has determined to allow negative financial inventory, because that discrepancy report is there to highlight differences between the inventory subledger and the general ledger. So you could have a valid negative inventory situation in your environment and it not show up on that discrepancy report because the values posted, the complementary values between the GL and the inventory subledger have posted, so it wouldn't be seen by the system as a discrepancy. But if you have negative inventory show up on your inventory valuation report and you don't think you should have negative inventory in your system, then certainly the inventory valuation report is the basis to go and do some further investigation on that. Okay.
All right. Maybe a related question here. Where's the inventory valuation and discrepancy report located in the inventory module?
Okay, great question. This is our setup window. The inventory valuation and discrepancies report are located under your inventory reports, the status section. And let's close these so that we can navigate through all the complete navigation. So it's inventory reports, status, inventory value, and here are your reports. Inventory value. If I had designed this menu, I would put inventory value on top and then potential conflicts grouped together underneath, but I don't do the development. So, but anyhow, these are the three reports that you're referring to. Okay.
All right, next question. If for some reason a journal entry was posted to the main inventory account, would the entries appear on the potential conflict report?
Well, it depends. Yeah, if you have a journal entry posted to the main inventory account, you'll definitely have that pop out as a potential discrepancy, because that report is going to recognize the posting to the GL account with no offsetting posting to the inventory subledger. You should never have that. Never, ever, ever have that. And I'll show you why. Because when you set up your accounts, there are certain accounts that are considered control accounts, meaning the account has an underlying subledger, which needs to tie to it, such as cash, petty cash, so accounts receivable. Your inventory accounts, hopefully you never see a journal entry posted or general journal posted into an inventory account. And here's how to prevent that. My inventory account, raw materials, you see this little box that says do not allow manual entry? That will prevent any general journals being posted to that account. Now, let's say that for some odd reason, maybe I'm doing my inventory reconciliation for the first time ever, and I have to post a general journal to reconcile my inventory. We can temporarily I have to change this to chart of accounts. We can temporarily allow manual entry, post our general journal, get our inventory reconciled, and come back in here and check that box, do not allow manual entry from that point forward. That way you can ensure that nobody is posting general journals into your inventory or any of your other control accounts for that matter. Okay?
All right. When you use moving average method from the practical standpoint, is it a good idea to run revaluation? How does revaluation affect reconciliation?
Yeah, definitely you want to run revaluation, because when you're using the weighted moving average valuation method, that revaluation will help you to get the most up-to-date and most recent valuation for that weighted moving average valuation. So really what revaluation is just stating your inventory value at its most current value, which is a prerequisite to reconciling your inventory. That's as important a process to run as it is running the inventory close process before trying to do an inventory reconciliation if you're on FIFO or LIFO. Okay.
All right. Yep. Let's see. So, do you need to use the inventory value report if posting is set to the asynchronous posting type?
You really use the inventory valuation report to tie out your your GL, do your month-end account reconciliations. There's potential, and we'll see what that potential is, that if someone indiscriminately goes into one of your item groups, and let's say they're clicking around in here and on their sales order packing slip, they accidentally changed it from finished goods inventory to, let's say, accounts payable. Well, that is going to create a discrepancy between your general ledger and your inventory subledger, because now my sales order packing slips for finished goods are going to be posting to my AP account. So I want to run that inventory evaluation report to see, first of all, is my subledger tying to my general ledger? And if it isn't, then I want to see, I want to run my potential discrepancy report to see why it's not tying. So that wouldn't be a good thing if we're sending sales order packing slip postings to accounts payable. So it's possible, without you knowing it throughout a particular period, that a setting gets changed, and the only way that becomes apparent is if you run your inventory valuation report to compare your subledger to the GL. Okay.
All right. At the beginning, the next question here is that at the beginning of the presentation, the close process was mentioned. Do you advise using the close feature included in the close and adjustment module on a daily basis, in addition to "quote-unquote" recalculating inventory on a daily basis?
That question is a depends. The answer is really it depends. It depends on your environment. How many SKUs do you have in your inventory? What's your transaction volume? How prone to inventory discrepancies you are in your environment? Most clients that I see just run that inventory close process at the end of the month. But if you're a high volume manufacturer or high volume distributor, and you're churning through lots of inventory and creating lots of inventory transactions throughout the period, you may want to run that inventory close on a more frequent basis. And the other thing that the inventory close does for you is it settles your financial inventory. It updates your inventory financially, so that if you're running interim, maybe you're running interim P&Ls or interim balance sheet reports, and you want to see the final settled value on those reports, it might make sense to run them more periodically or more frequently than just the end of the period. A daily, I don't know, unless you have a specific business requirement or a reporting requirement that causes you to, or provides a need to run it that frequently, I'm not sure how much value there would be to running a daily inventory close. Okay.
All right. Where do we define resource groups in the product or product master?
Great question. So these really are your resource groups here. They're set up. For some reason, the terminology is different in different windows. The resource groups are really your item groups, and this is where you set them up.
Can you batch the revaluation for moving average nightly? Would you recommend nightly runs?
Yeah, you can batch any process in AX. You can run it periodically, any process. It would not hurt to run it nightly. I don't see companies generally running it nightly, but there's no harm in doing so.
Let me make a final call for questions here. We're at the top of the hour. I just want to remind folks, when you do depart today, please look for the survey that pops up. We really appreciate your feedback. It'll only take a few seconds. So the final question here, where do we define, oh, I might have already read that one. Yep, I did. That's a repeat. Okay, well, we're at the end of our question queue. We're at the top of the hour, so good time to start wrapping up. Frank, thanks so much for taking the time today to present and answer so many questions from our audience.
My pleasure, and I really, again, appreciate the audience taking the time out of their day as well. If you have any questions, please feel free to call me or email me, and we'll try to get those questions answered for you.
All right. Recording is coming soon, as well as details on the slides. We do thank you for your time today. And with that, we will conclude today's event. Have a great day.
Thanks, Jason.